Classic yet simple chart patterns provide great structures to reference when placing repeating intervals for Fibonacci circles that help determine the impact of a trend continuation in this case. Naturally, the first four lines will be like a regular Fibonacci time zone, so their intersections with the outer circles quite neatly identify some key swing points during this current phase when the drop in price significantly slows. With this moderate upward retracement, the Fibonacci circles could also have been applied to roughly narrow down the area of interest for the peak just under the concentration of resistance at the long-term 130 level. Now another neutral to bearish situation, providing clear and relatively recent downswing points to reference for the application of Fibonacci circles, where it's clear there's been continuing strong support at this circle, which currently narrows down this area in price and time as the potential site of a major event. Interestingly, when we do the same thing with these more recent downswings, the same approximate area is identified. And given the recent congestion of price moving into this interval, it is more possible there could be the build-up towards a more significant move in the near future.